London, February 11th, 2026. The morning air around Marlborough House was tense as Prince William made one of the most extraordinary royal statements in recent history, declaring the Crown's full cooperation with the United States Internal Revenue Service, IRS, in its active investigation into the Archewell Foundation and its affiliated commercial ventures. Standing on the South Steps before a packed global press corps, William delivered his remarks with measured calm and legal precision. Let no one mistake silence for consent. The Crown does not endorse, finance, or associate itself with the Archewell Foundation or its subsidiaries. Our role is to protect the constitutional integrity of this institution, and we will act with full transparency when that integrity is questioned. Though delivered diplomatically, the speech marked a historic constitutional intervention by the heir apparent. For the first time in decades, a future monarch had stepped into an international investigation, addressing speculation over whether the royal family had any historical or symbolic connection to Archewell, the non-profit founded by Prince Harry and managed by Meghan Markle. The IRS inquiry, officially launched on February 9, 2026, sought clarity on three specific points: whether any British royal entity had ever funded or endorsed Archewell, whether royal titles or insignia had been used in U.S. ventures without permission, whether Archewell's U.S. fundraising or branding misrepresented royal support. The probe intensified after the resurfacing of Meghan's 2023 Aspen Impact Forum remarks. Archewell represents not just our family, but a legacy of service that the Crown instilled in us. U.S. regulators flagged that statement as potentially misleading, prompting a forensic review of Archewell's tax records, fundraising materials, and associated commercial projects, especially, as ever, Meghan's luxury lifestyle brand launched in 2024. Investigators were particularly alarmed by the use of stylized crowns and royal emblems across product packaging and marketing visuals. Within 48 hours of receiving the IRS's formal letter, Sir George Liles, chair of the Royal Trust, convened an emergency digital summit between the IRS International Tax Crimes Unit and senior palace legal officers. The virtual session, held on February 14th, produced unprecedented disclosures confirming that no sovereign funds or charitable grants had ever been directed to Archewell. Internal palace warnings had been sent in May and September 2024, cautioning against Archewell's use of royal imagery. No licensing or endorsement rights were ever granted to any US-based entity trading on the Duke or Duchess of Sussex titles. According to one palace insider, the IRS team was stunned by the precision and completeness of the documentation. The Washington Post quoted one agent calling it the most candid cross-border nonprofit audit collaboration we've ever seen from a historical institution. 2 days later, on February 16, 2026, an unpublicized in-person meeting took place at Clarence House between Prince William and Peter Howard, the IRS's Senior Director for International Tax Crimes. The meeting lasted just under 2 hours. Not ceremonial, but operational. This was no royal formality. It was a clear signal. For the first time, the future King of England had stepped directly into the world of international financial accountability, and the monarchy was prepared to face the truth head-on. The confidential Clarence House summit on February 16, 2026 was anything but symbolic. Prince William was joined by the palace's chief counsel, the Royal Trust's ethics director, and a senior representative from HM Treasury. Across the table sat Peter Howard of the IRS, backed by legal staff from the U.S. Embassy and federal financial auditors. The mood was clinical, tense, and steeped in accountability. The IRS had submitted 6 core questions ahead of the meeting, each one surgical in scope: improper use of the Duchess of Sussex title in U.S. tax records, false implications of royal endorsement in fundraising campaigns, commercial packaging mimicking royal crests and gift aesthetics, financial ties or lack thereof between the Crown and Archewell, any diplomatic representations made by the Sussexes abroad, the full record of Palace Sussex communications from 2021 to 2025. Sources say William's tone was measured but unwavering. When asked about reputational damage, he replied, "The royal family cannot be reduced to a marketing motif. We are stewards of a constitutional legacy, not participants in a narrative crafted for private monetization." The line echoed the wisdom of Queen Elizabeth II and Prince Philip, who often reminded younger royals that service must never be confused with brand building. William's decision to address the public before the IRS completed its audit was intentional. Palace aides said it served three purposes: reassure taxpayers and the Commonwealth that the monarchy had no financial link to Archewell, clarify the Crown's legal neutrality before the U.S. inquiry's next phase, demonstrate international transparency, aligning with both HM Treasury and U.S. standards. His speech introduced three formal principles that are now considered standing palace policy. Institutional firewall. No royal, active, or retired may imply Crown endorsement for private gain. Ethical neutrality. The monarchy must remain nonpartisan, non-commercial, and above self-interest. Duty to disavow. If any venture exploits royal association without consent, the Crown reserves the right to issue formal legal disavowals. These principles, later published in a document titled Statement of Institutional Separation, Archewell and the Crown, were immediately distributed to international charity commissions and non-profit regulators across the US, UK, and Canada. By midday, William's remarks had made global headlines. The Guardian, William's royal firewall. The Crown draws the line on Archewell. The Times, from trust to truth. Prince William's historic declaration. The New York Times, a future king's statement, a present reckoning. Behind the headlines, real consequences followed. The Privy Council began preparing to review the legal authority of the Sussex titles. A palace source confirmed King Charles III had given full consent in principle to proceed with legal examination if misuse was verified. Meanwhile, the IRS probe deepened. Audit reports uncovered troubling inconsistencies in Archewell's 2024 filings. Total donations, $2.1 million, down from $5.3 million in 2023. Total expenses, $5.1 million. Charitable grants, $1.25 million. Salaries for 2 employees, $913,000. Administrative and security costs, $2.9 million. That meant over 75% of Archewell's spending went to overhead rather than philanthropic work. For a charity this small, one IRS auditor remarked, the structure looks more like a private business than a non-profit. The eyebrow-raising detail? Archewell listed just 2 full-time employees, neither with executive-level non-profit experience, yet both drew 6-figure salaries. Questions over potential misappropriation grew louder. Launched in 2024 with glossy campaigns and celebrity endorsements, Meghan Markle's lifestyle brand As Ever entered the market promising purpose-driven luxury. It featured fruit preserves, herbal teas, candles, and decor items, each wrapped in packaging that carried uncanny echoes of royal design. There were stylized crowns, serif fonts identical to those used on royal stationery, and taglines like "By Royal Ritual" and "Inspired by Legacy." Critics immediately noticed how the branding resembled official Windsor gift aesthetics. But the true shock came months later. Forensic data analysts discovered that the brand's website had quietly overstated sales figures. Despite media claims of sold-out success, internal data revealed $23 million worth of unsold inventory sitting in North American warehouses. 137,000 boxes of preserves, 44,000 monogrammed candles, and 80,000 floral sachets. In a 24-hour promotion tied to Meghan's birthday in January 2026, the company sold just 26 units. IRS investigators concluded that As Ever's abrupt move in June 2025, placing itself under another nonprofit's fiscal sponsorship, was not about efficiency, but evasion. A confidential memo stated, "This restructuring pattern aligns with entities attempting to conceal operational deficiencies." As Ever faltered and Archewell drew scrutiny over transparency, Buckingham Palace recognized the need for swift disassociation. Prince William's February 11th declaration was both a constitutional statement and a shield, protecting the monarchy from what U.S. regulators were calling a strategic collapse of donor and consumer trust. With forensic audits exposing financial inconsistencies, both Archewell Foundation and As Ever entered active fraud review under the IRS. At the heart of the escalation were 2 intertwined concerns: unauthorized use of royal titles and imagery for commercial leverage, brand misrepresentation intended to mislead donors and consumers. Immediately after William's statement, the Royal Trust's legal office sent a cease and desist order to Evermark Collective Incorporated, the Delaware-based parent company of As Ever. The notice cited violations including packaging and slogans copying official royal motifs, phrases like Windsor blend, by royal ritual, and legacy inspired, implying crown affiliation, use of royal blue and gold color palettes, stylized crowns, and fonts exclusive to Buckingham Palace communications. Simultaneously, palace lawyers issued a formal reputational disavowal of Archewell, notifying regulators in the US, UK, and Canada that the monarchy had no financial, symbolic, or moral connection to the foundation. The filings emphasized that repeated palace requests for Archewell to cease royal-adjacent branding had been ignored or selectively interpreted. In the aftermath, the Royal Trust updated its branding compliance charter, adding 3 decisive clauses. Title: Usage Review. All post-abdication use of royal titles, honorifics, or territorial designations in fundraising or product sales now requires pre-clearance by the Lord Chamberlain's office. Symbolic affiliation audit. Any reference to the crown, royal service, or visual symbols resembling Windsor emblems must be fully documented before public release. Institutional firewall clause. Any foundation or business invoking royal legacy must include a clear disclaimer: not affiliated with the British monarchy or the sovereign grant. These measures apply retroactively to all living former working royals, a direct attempt to prevent future misuse of royal identity. Perhaps the most publicly charged element of the entire investigation remains Meghan Markle's ongoing use of the title Duchess of Sussex. It continues to appear on podcasts, book covers, merchandise, and online platforms, despite the couple stepping down from royal duties in 2020. While Meghan retains the title as a ceremonial courtesy granted by Queen Elizabeth II, U.S. investigators argue its use in commercial and promotional materials crosses into misrepresentation. And for the first time, regulators are openly debating whether that title, once symbolic of royal grace, has become a legal liability. Use of the Duchess of Sussex title for business purposes is no longer sanctioned. Prince William made that clear in his February address. Titles bestowed within the crown are not trade assets. They are not shields for profit, nor tools for branding. They are symbolic duties held in public trust. The statement carried enormous legal and constitutional weight. Royal advisors explained that continued commercial use of a royal title, especially during an international audit, can shift from cultural expression to deceptive marketing. The IRS has since requested detailed records of Meghan Markle's direct approvals for branded materials featuring her title, contracts for partnerships or book deals, and communications implying royal affiliation to donors or sponsors. A Royal Household Brand Protection Memo, dated May 2024, warned that unauthorized title use without institutional connection could be grounds for civil review under UK trademark law. During the February 16th closed-door meeting at Clarence House, attended by William and Peter Howren of the IRS, discussion centered on the misuse of royal symbols, misleading fundraising tactics, and Meghan's repeated references to royal tradition. Sources say William personally presented visual evidence comparing as-ever packaging to official royal Christmas gift boxes, pointing out identical fonts, color palettes, and motifs. He also shared transcripts of Meghan's 2023 to 2025 speeches, highlighting repeated phrases such as continuation of royal tradition and Windsor values. The presentation included internal warnings from 2021 onward, sent by palace legal staff to the Sussexes, urging them to remove specific royal imagery and language. When asked whether these issues posed a reputational risk, William's response was unflinching. "This is not theoretical. The harm has already occurred. In donor trust, in public understanding, and in what the crown represents. We're not speaking to deflect it, we're working to repair it." Shortly after the summit, the IRS and HM Treasury issued a joint compliance memorandum formally acknowledging the royal family's full cooperation. Though diplomatic in tone, the message was decisive. The investigation would now continue solely against Archewell and Evermark, with the monarchy fully cleared of entanglement. As legal pressure mounted, As Ever quietly went dark. Its official website was shut down on February 18th, citing technical maintenance. Major retailers, including Fortnum & Mason, Harrods International, and Hudson's Bay, confirmed suspension of distribution contracts. Warehouse operators in New Jersey and Ontario refused further inventory, citing non-payment concerns. IRS forensic data showed over $23 million in unsold products across North America, including 44,000 jars of Windsor orange marmalade, a product once touted as the brand's bestseller. Despite heavy birthday promotions in January 2026, only 26 units sold in 24 hours. Regulators began calling the collapse what it truly was, a strategic implosion of credibility. In Westminster and Washington alike, that phrase now defines the scandal's scope. The Royal Trust has since prepared a title usage review submission to the Privy Council, seeking formal evaluation of whether continued commercial use of the Sussex title breaches royal charter principles. Palace lawyers are drafting a civil breach claim against Evermark Collective for symbolic exploitation and reputational harm. Meanwhile, the IRS is working with the U.S. Department of Justice to determine whether wire fraud or charitable misrepresentation statutes apply to the Archewell case. Through it all, Prince William's leadership has drawn rare bipartisan praise. His strategy, to draw a line, not a curtain, has been hailed as proactive, constitutional, and institution-saving. The events of February 11th and February 16th have now crystallized into a formal institutional firewall, the first of its kind in modern royal history. At its core lies one defining principle: the doctrine of symbolic neutrality. That royal identity, once misused, must be reclaimed through transparency, not silence. At the center of the doctrine of symbolic neutrality lies a centuries-old rule: the crown cannot be leveraged for private, political, or commercial gain. That expectation, long upheld without question, has been relentlessly tested by the Sussex household since 2020. Prince William's intervention marked the turning point. What began as quiet distancing has become a legally codified repudiation. In the days following his February statement, the fallout hit fast, as Ever's official website vanished behind a maintenance notice. Retail partners across the UK, Canada, and the US froze product launches. A Royal Trust cease and desist order reached Evermark's legal counsel, demanding removal of any packaging echoing royal design. Simultaneously, the IRS issued a compliance warning to Archewell, citing continued use of misleading donor language. Charity rating platforms like GuideStar and Charity Navigator updated Archewell's profiles to reflect pending federal audit. The numbers told the real story. IRS auditors confirmed that over 75% of Archewell's 2024 expenses had nothing to do with its stated mission, most linked to travel, security, and promotional work tied to Meghan's personal ventures. The term coined by regulators, strategic collapse of credibility, quickly took over headlines from London to Los Angeles. Meghan Markle was no longer viewed as a philanthropic innovator or symbolic royal figure. She was now facing possible civil penalties, brand collapse, and global institutional disavowal. According to IRS auditors, the entanglement between As Ever, Archewell, and the lingering Sussex titles reflected not mismanagement, but a deliberate fusion of royal symbolism and private profit. This conclusion was supported by a leaked email from a former Archewell executive assistant, now cooperating with investigators. The message outlined a selective transparency strategy, describing efforts to maintain donor confidence through legacy language and post-royal branding. In short, royal terminology had become a marketing weapon. Prince William's tone throughout remained disciplined and unflinching. When asked whether he regretted the personal toll his actions might have on his brother, he replied, "There is no confusion about our duty, only disappointment that it has come to this." That answer encapsulated his approach, what palace insiders now call the Windsor model: dignified firmness, guided by documentation, not emotion. Royal historians and constitutional scholars quickly praised it. The monarchy didn't retaliate. It responded with records, ethics, and law. Within days, two formal processes began to solidify the new standard. Permis. Privy Council Review. At William's recommendation, and with King Charles's consent in principle, legal advisors began drafting a briefing paper to determine whether misuse of the Duke and Duchess of Sussex titles in non-profit or commercial contexts constitutes grounds for suspension or revocation. 2. Drafting of the Civic Clarity Act. In collaboration with the Royal Trust and the Palace's Constitutional Affairs Office, a new policy framework titled the Civic Clarity Act was developed. Its purpose: to regulate title use, prohibit symbolic imitation in commerce, and enforce disavowals through clear legal mechanisms. Though spurred by the Sussex case, the act will serve as a permanent safeguard, ensuring no former royal can exploit institutional language or imagery without explicit consent. The global response was immediate. Royal households across Europe took note. Senior officials from Sweden and Denmark privately praised the UK's handling of institutional risk. In the United States, the IRS issued a statement commending the royal household's candor, documentation, and policy cooperation. The Wall Street Journal headline captured the moment. "The crown is not for sale. How Prince William quietly reinforced a royal firewall." The symbolic line had become law. The royal family wasn't merely defending its name, it was defending the very definition of service in the modern era. As the IRS investigation into Archewell deepens, its ripple effects are shaking the intersection of charity, celebrity, and monarchy. What began as a routine audit has evolved into an international reckoning over the blurred line between public duty and personal branding. The palace's public disavowal, delivered by Prince William on February 11th and reinforced through legal frameworks in the days that followed, has already reshaped accountability on both sides of the Atlantic. According to officials at the UK Charity Commission and the IRS International Compliance Office, a joint transatlantic task force is now reviewing whether Archewell's fiscal sponsorship arrangement was used to solicit donations under false impressions of royal endorsement. Original word count, 1,336. Rewritten word count, 1,170. At the center of the expanding legal storm sits Archewell's quiet restructuring in June 2025, a move that now anchors the IRS's case. The foundation's transition into a fiscal sponsorship model, where a smaller nonprofit operates under another organization's tax-exempt umbrella, was not illegal in itself. But as IRS auditors noted, it was deeply irregular for an internationally recognized charity tied to a former royal household. The timing raised alarms. The change occurred just weeks after multiple outlets began questioning Archewell's opaque finances and shrinking grant activity. The new structure conveniently freed Archewell from filing its own Form 990, drastically reducing public access to its spending. One stark line from the audit summary said it all. This restructuring appears deliberately timed to avoid scrutiny at the moment public questions arose over financial inconsistencies and symbolic misrepresentations. According to IRS data, donor trust plummeted from $13 million in 2021 to just $2.1 million by 2024. Yet administrative costs ballooned while charitable grants dropped below 25% of total expenditures. Inside Buckingham Palace, the sense of urgency is palpable. A revised Royal Communications Code now mandates disclaimers on all external engagements by non-working royals and introduces a digital registry to track unauthorized use of monarchical language. The system logs phrases like "the Crown," "royal standard," and "Windsor legacy," ensuring any misuse in media, merchandise, or marketing is immediately flagged. The Privy Council's legal board, advised by the Royal Trust, has formally warned that continued use of the Sussex titles in connection with questionable charitable representation could constitute breach of public trust through symbolic manipulation. As one palace source put it, "It's not just the misuse, it's the persistence, the deliberate effort to leverage crown language to validate private ventures. That's what undermines faith in the meaning of service." This captures the monarchy's growing fear. If the boundary between duty and profit isn't strictly enforced, the constitutional credibility of the crown itself could erode. Meanwhile, for Meghan Markle, the financial risks are intensifying. Internal warehouse leaks confirm over $23 million in unsold as ever inventory, merchandise that once claimed to carry royal values. Wholesale partnerships have collapsed, and Meghan now faces possible violations of multiple U.S. laws. Title 26, Tax Fraud and False Reporting. Title 18, Wire Fraud and Misrepresentation. California Nonprofit Integrity Act, False State-Level Filings. If prosecuted, penalties could include civil forfeiture of misused charitable funds, revocation of Archewell's nonprofit status, public release of internal communications, and brand blacklisting by retail and charity networks. The California Attorney General's office has even reopened a dormant 2023 compliance inquiry, citing new evidence of falsified disclosures. On February 20th, the royal household is expected to submit a formal petition to the Privy Council seeking review of the Sussex titles. Legal experts confirm that under constitutional law, the Crown can suspend or revoke a dukedom or peerage if its continued use presents reputational, legal, or institutional risk to the state. Sources say King Charles has already reviewed draft language for a revocation order and supports action if statutory misuse is confirmed. Should it proceed, it would mark a historic first: a post-abdication royal stripped of titles for violations of symbolic neutrality and financial integrity. During his public address, Prince William reiterated the core principle now defining his leadership. The Crown must remain above commerce. Its service must never be confused with personal enterprise. That line, delivered with quiet conviction, has become the monarchy's moral and legal compass. The firewall William built is no longer theoretical. It's policy, precedent, and proof that the institution can adapt without surrendering its dignity. As February 2026 draws to a close, his intervention stands as a constitutional watermark, one that has permanently redrawn the relationship between monarchy, media, and monetization. The aftershocks now ripple across three fronts. Legal. The Privy Council's subcommittee is examining whether title misuse breaches constitutional law. Symbolic. The doctrine of service over status has been reasserted. Institutional. The Crown has proven it can defend itself through evidence, not emotion. Legal historians note that the investigation's foundation draws from the Titles Deprivation Act of 1917, once used during wartime, now repurposed to protect constitutional integrity in peacetime scandal. Though the Titles Deprivation Act of 1917 may not be directly invoked, its underlying principle, that noble status must serve national duty, now guides the Privy Council's deliberations. One senior aide close to Prince William summarized the palace's evolving stance as not political but protective, protecting the monarchy from reputational decay, legal ambiguity, and the commercial misuse of inherited symbols. King Charles III, while remaining publicly neutral, is said to hold no objection in principle to title revocation should evidence of misuse be confirmed. A final ruling is expected by March 2026. Meanwhile, the future of Archewell Foundation looks grim. IRS officials confirm that the charity may lose its 501c3 status permanently. Misreported funds, especially those linked to travel, private security, and PR expenses, could face 75% civil fraud penalties. If indictments proceed, key internal documents previously protected under fiscal sponsorship secrecy will be subpoenaed and made public. Watchdog groups like Charity Watch and ProPublica have already announced joint reviews into Archewell's governance, calling it a defining case study in celebrity philanthropy gone wrong. At the same time, Meghan Markle's lifestyle brand, as ever, is reportedly entering commercial liquidation. Retail partners have pulled contracts, warehouses are preparing for inventory write-offs, and forensic accountants now list the brand as no longer a going concern. For Prince William, this crisis has become a crucible, one that has not only reinforced the moral architecture of the monarchy, but also redefined royal identity itself. The newly revised Statement of Institutional Separation, co-signed by William and the Lord Chamberlain, is now being distributed across Commonwealth governments, embassy networks, and media licensing boards. It outlines three binding principles: no title without duty, no symbol without sanction, no affiliation without fact. These are now the official guardrails for all royal-linked charities and post-royal ventures. In a private remark shared with The Times, William reportedly said, "The world must know there is a line. Not every name carries meaning, but ours must carry truth. That clarity is now the monarchy's shield." In the end, this was never just about taxes or titles. It was about the meaning of public service, and whether inherited legitimacy can be marketed without consequence. By stepping forward with documentation, discipline, and dignity, Prince William has realigned the monarchy's compass. He's demonstrated that the crown is not a brand to be bartered, but a duty to be guarded. As for Meghan Markle, her reckoning may continue in courtrooms and corporate boardrooms. But for the royal family, this storm has yielded something far greater: a legal doctrine, a reputational defense, and a leadership precedent. The House of Windsor has drawn its line. And from Marlborough House to Washington, one message now rings with unshakable clarity. The crown is not for sale, and no one, not even a duchess, stands above its duty.